Hello and welcome back to the COVID-19 Economic and Market Impact Series for our June 5th weekly update. I'm Cansu Freeman, Research Assistant at the Center for Regional Analysis. This video series is part of the Northern Virginia Association of Realtors George Mason University Market Forecast Project. Initial claims for unemployment insurance for the week ending May 30th continued to drop by about 250,000 from the adjusted 2.1 million in the prior week. The continuing decline in new claims gives us hope that the worst of the economic downturn is behind us, but the elevated level of job displacement shows that the economy is still highly vulnerable and in a state of flux. Yesterday's release of May job numbers shows that the partial removal of business restrictions has helped many workers to get back on the job. Total job counts in the U.S. swung back into the positive territory in May, with a net gain of almost 3 million jobs and a drop of unemployment rate to 13.3%. However, when underemployment is counted, the percentage of U.S. workers in some sort of job distress remains above 20%. Those who expect the economy to roar back to 2019 levels will be disappointed. Much like the recovery from the Great Recession, it could take most of the remainder of this decade to get back to full employment in the U.S. Continued claims, which represents individuals who have filed claims for more than 1 week, remain stable, which, given that new claims remain at a highly elevated level, this suggests that some previously unemployed persons are finding new jobs or are being called back to their previous jobs. From its peak on May 9th at about 25 million to the most recent figure on May 23rd of 21.5 million, there are 3.5 million fewer workers filing for unemployment insurance for 2 or more weeks. Looking at the distribution of job gains in the month of May, it's not surprising that the easing of business restrictions in many markets sparked a surge of rehiring in the leisure and hospitality sector. Construction also saw some rebound along with health services and retail trade. Notably, with their tax revenues hammered by the downturn, state and local governments have started to shed payroll workers. If Congress does not pass a substantial support program for state and local governments to complement business support programs, then things are going to get real ugly for governments below the federal level. This will flow through to public services, some of which specifically support unemployed, financially distressed households, and the lack of staff may inhibit government functions needed to get businesses back open. Notably, transportation also remains depressed as airlines continue to struggle, and freight transportation carriers adjust to manufacturing plant closures. New listings for homes in the NVAR service area continue to show signs of resilience and modest strengthening, with a weekly daily peak of 159 homes being brought to the market, the highest level since the pandemic hit in early March. We are hopeful that the lowering of business restrictions in Northern Virginia will lead to a breakout moment in the housing market so that summer can at least be closer to normal levels of housing market activity. However, with unemployment still high, the looming end of mortgage forbearance programs, and rising questions about companies and governments lowering wage levels for employees who remain in their jobs, there are new headwinds emerging even as we continue to weather the initial market storm created by the pandemic. Referring to the chart on the right, we remain unsure why pending sales data have lost all their usual weekly seasonal patterns, but the trend line for new pending sales has been clearly positive for 2 months. Be sure to look in the next issue of Review magazine for an examination of the pandemic's effects on the amount of time it takes to close a contracted sale. Please continue to check out the data, research reports, and other resources available at these websites. As always, we are grateful for your support. Until next time, thanks.